government says it is intensifying efforts to secure cheaper funding and stronger international financial support as rising geopolitical tensions continue to weigh on Nigeria's economic outlook. This position was outlined ahead of the 2026 IMF and World Bank spring meetings in Washington, where Nigeria is expected to push for fairer global financial conditions and reduce borrowing costs for developing economies. Authorities note that the ongoing US-Israel-Iran conflict has disrupted global energy markets, tightened financial flows, and triggered renewed inflationary pressures, further complicating Nigeria's ongoing economic reforms. While higher crude oil prices have boosted revenue prospects, the government warns that the gains are being offset by sharp increases in domestic energy costs, with petrol and diesel prices rising significantly. The administration identified key pressure points, including rising energy costs, weaker capital inflows, and elevated import expenses. Despite these challenges, officials maintain that Nigeria is entering this period of global uncertainty from a relatively stronger position compared to previous crises and is seeking targeted global support to sustain growth, stabilize the economy, and shield households and businesses from further shocks. Africa's share of global foreign direct investment continues to lag, hovering between 4 and 6%, according to the latest manufacturing review by the Pan-African Manufacturers Association. The report highlights a concerning trend, noting that despite a 14% rise in global FDI to $1.6 trillion in 2025, investment inflows into Africa declined sharply by 38% to just $59 billion. Analysts describe the continent's position as largely peripheral within global manufacturing systems, with recent investment surges driven more by isolated large-scale projects than by sustained industrial growth. The report further underscores structural challenges, pointing to an over-reliance on extractive industries and low-value services, which continue to limit Africa's industrial transformation and job creation potential. While countries such as Egypt and Morocco have made progress by leveraging trade ties with Europe to build manufacturing hubs, regions like Southern Africa, particularly South Africa, have faced capital flights and declining investor confidence. The review concludes that fully implementing the African Continental Free Trade Area could be critical in unlocking integrated markets, boosting cross-border production, and positioning Africa for stronger participation in global value chains. And Nigeria has once again fallen short of its crude oil production quota set by the Organization of the Petroleum Exporting Countries, marking the 8th consecutive month of underperformance. According to the latest OPEC report, the country produced an average of 1.38 million barrels per day in March, reflecting a modest increase from February's output, but still below the 1.5 million barrels per day target. The persistent shortfall underscores ongoing production challenges despite intermittent improvements recorded earlier in the year. Historical data shows that although Nigeria briefly exceeded its quota in early and mid-2025 production, levels have remained largely inconsistent, affected by operational setbacks and maintenance activities. However, industry regulators indicate that production began to recover in mid-March following the resumption of key assets, raising cautious optimism that output may align with OPEC targets in the upcoming months. The continued gap remains a concern for revenue generation and fiscal stability, given Nigeria's heavy reliance on crude oil earnings. And finally, the Nigerian equities market opened the trading week on a positive note, with strong investor appetite for medium and large cap stocks pushing total market capitalization to 131.6 trillion naira. The all-share index advanced by 0.34% to close above 204,000 points, reflecting renewed investor confidence despite prevailing macroeconomic pressures. Market breadth remained positive, with gainers significantly outnumbering decliners, driven by sustained buying interests across key sectors. Leading the rally were prominent stocks including Nigeria Exchange Group, Guinness Nigeria, Stanbic IBTC Holdings, and Nigerian Breweries, all recording notable gains. The Nigerian Exchange Group stood out as a top performer, achieving the maximum daily pricing increase, while other equities such as Trans-Nationwide Express and Enkinoklus Consolidated also posted strong gains. Market analysts said bullish momentum signals improving sentiment in the equity space as investors continue to position themselves strategically amid evolving economic conditions.